G'day everyone, welcome back to Pete's Investing. Today is May the 9th, 2023. This is the spot gold price update. So first off, on the weekly, you can see there it's a bullish signal on our indicators, and I'll go through those in a second. But on the daily, it's neutral. So again, I'll explain that. Now on the weekly, first off, for those new to the channel, we look at the triple moving average of the price chart. That's moving average 3, 5 and 60. And we look at the CCI 150 with moving average 5 and 50. So when they're both going in the same direction, that in this case bullish, that shows a bullish signal down here. When one of them is conflicting with the other, that shows a neutral stance, and when they're both aligned going in a bearish momentum, it shows a bearish signal. So at the moment it's showing a bullish signal, so primarily on the weekly, based on the weekly, we go long only. On the daily chart, you'll notice that indicator is showing a neutral stance, because in this case it looks like the price chart is still in an upward swing with the moving averages, but the CCI is broken to the downside very, very slightly. So it's only a slight break, but so we could see a reversal of that soon, but just be mindful that's giving us a potential downward motion. The other key thing to notice as well, I've drawn here a divergence across these tops on the CCI. It's a bearish divergence versus a bullish divergence on the price chart. And what that means is, if this works, if this plays out, we should see I suppose a collapse, albeit a very slight one. It could come down as far as a 61% possibly, for example. We don't know how far it's going to drop, but it could actually retrace back down to the downside if the CCI breaks to the down, and so does the price as well. That generally means it's played out well. If this divergence fails, then we should see the price rise and break through this support level, this resistance area, and we should see the CCI likewise break to the upside. So in other words, we should see the CCI and the price move in the same direction one way or the other. This indicates a bearish movement, so be careful not to go long at this point, especially if this indicator is still bearish or neutral as it is now. If I zoom out, you'll just notice there's a key support at 1617 and a resistance at 2082. If I zoom in, you'll notice I did draw a Fibonacci between that resistance and that low there, and you'll notice the price has bounced off that 38% quite significantly in the last few days. So again, we may see it come down and rest on this potential ascending trend line possibly. Like I said, if this plays out, we're going to see it collapse through that and probably further to the downside. So we'll see how that goes in the coming days. As a trading idea, and again, take trades primarily on the lower time frames, and I'm looking at the hourly here. Again, we use average down the process. We don't use stop losses, so this is just a good example of what not to do and what to do. So each of these bars or steps indicates a trade is entered. So when it's a single block like this, it means that an entry was made and it exited with a closed trade with a profit. That's the profitability line. So these are all single entries and exits. Where it's stepped, like in two entries made or two contracts entered there, and here this one's got 1, 2, 3, 4, 5 contracts entered. You'll notice the price also has a drawdown on the profitability. Now, this is a good example of what not to do. Remember, when I say trade with the trend, we trade primarily with the weekly. So you'll notice here, if I move the cursor on the weekly, now just pay attention to the hourly and how that reflects in this area here. So if I move the cursor to where that was the last bullish signal made, so when it closed bullish signal there, notice that grey line on the hourly chart. You'll notice here it's near the start of that collapse of the price of the profitability. And then if I started again on the weekly, I start again on the bullish signal is given. Notice there on the right on the hourly chart, that's where the profitability starts from. So what that basically means is on the weekly you avoid taking any long trades on the hourly. So you would have avoided taking all those trades during that period on the price chart, which means you would have avoided that drawdown. So always abide by the rules, even if it stops for a few weeks like it did here, stop for a couple of weeks there. Always abide by that rule. So if it breaks to the downside, or it's not bullish anymore in this case, stop trading on the hourly. So to understand how to trade this and other trading strategies, reference the Patreon page for exclusive access to weekly stock scans with average down strategies. We scan for stocks, currencies and commodities. Subscribe, like and share the video. Thanks for watching, and see you in a future video.